And now we're going to start having a look at some numbers and drill into some data and see what that brings up. Ash, what are we looking at today? What's the one that has the best numbers for us today?
Well, I think when we look at the dollar, it becomes interesting, and I think the fact that we've got such an important announcement last week when we had the tapering starting to come in, and it seemed to be a bit of a damp squib, but I think it's really significant. I think the fact that we are starting now the pullback effectively of liquidity, we're likely not to see the real effects for maybe a month, maybe a few months, but I think that going into next year, this is when caution really needs to start coming into play. I agree with Jules. I'm really concerned about the stock market and its current valuations. There are certain metrics which suggest that we are incredibly high in comparison to where the valuation should be. But as I say, I agree with Jules. What's the chart saying? And the chart says that we really should stick with a trend to the upside. There may be some fluctuations on the way, but right now, we just had this infrastructure bill passed as well by the Republicans in America. Not a lot really points to the timing for us to be moving significantly lower is in play. And if we look at the dollar as a bit of a metric, oftentimes when the dollar is coming down, the closest correlation would be dollar down, stock market would continue to move higher. And we look at this dollar index is still very, very low. We haven't really seen this play out yet. We haven't really seen the bears come into play on the dollar index. But in accordance to COT data, the move to the downside is coming, and it's potentially building. If we look at the seasonals to see if we can get some kind of timing on this, it does actually suggest that we peak out sometime towards the end of November. So maybe the third into the fourth week of November would be the point with in accordance to the seasonals when we see this start to come down and come down pretty hard as well. That's going to be, there's going to be a little bit of a timing discrepancy there. So it could start as early as next week. Could be a couple of weeks before we start to see the dollar come down if it plays out with the seasonals. Now, if we compare this to a currency, the yen is the hottest ticket in town. 99% on the 3-year, 99% on the 18-month, and 97% on the 6-month. But the seasonals aren't ready yet for the yen to rally. So the COT data and the seasonals aren't currently lining up, and they don't really line up probably until December. But if the yen was to start to move to the upside, and maybe we saw some kind of problem with the dollar, where do we then start to go? Well, the stock market would be under pressure, I would suggest. If the yen is bought up as some kind of risk off protection, the stock market may well be under pressure. Gold and I think silver are the really interesting aspects here, because this is where we might start to see people still buying stocks and not worrying too much about buying stocks, but in the back pocket putting their protection, the protection in place. I particularly like gold and silver. I'm not really a fan of the Bitcoin Ethereum argument at these price levels. I think it's too loved for me, and it's a personal thing. I don't particularly like buying things when they are loved. I much prefer to buy things when they are unloved, and I still see the gold and silver market falling into that category, and I wonder whether we might start to see that come through. COT data at this stage is not supporting that, and again, this is going to be a timing thing. 38% is all we've got really for the COT data on the 36%, 62 on the 18-month, and 18 on the 6-month. And if we look at the seasonals, gold would tend to start to rally sometime around about the middle to the end of November. So I'll be looking into that. But what the data is suggesting to me this week, mate, is that there's not really a lot that I'd like to be committed to, but there is a lot I'd like to get ready to be committed to.
Mate, I've got two questions for you. When you do those numbers and say 36%, 33%, 30-odd%, what?
So that's the index. That's sort of like, that's telling us when we're looking at the.
They're telling us how many are long, how many are short.
It's a calculation between the long and the short. So when the percentage of the index is 80% and above, it's telling us that the commercial the commitment of traders is bullish. When it's below 20.
Japanese yen 99%. The professional traders are long the yen.
Yes, very bullish, because it's not only above 80, it's way above. It's near the top end. It's 100%. It's as high as you can get.
And gold in the 30s tells us that the professional traders are slightly short, but not particularly committed to it.
Yeah, I when anything between the 20 and 80 band, I see that as kind of benign, and it's not a number that I'm interested in. With COT data, I'm really interested in the extremes, and the extremes are below 20% and above 80%. So extremes this week, definitely the dollar is at 5%, definitely the yen at 99%. So this week it's pushing us towards a dollar yen short if you look at the COT data alone.
Mate, it's going to be an interesting wind out of this Fed tapering thing, isn't it? I'm pretty sure they said something along the lines of, we'll worry about inflation when we've got full employment. Now, that suggests to me that they don't know how to taper.
Absolutely, and it also suggests that they're very, very concerned about moving. They're almost. It feels like they're changing the goalposts and they're pushing them forward and forward and forward. Or they know something already, but they didn't want. I thought Jerome Powell was quite professional the way that he batted away some of those more difficult questions, and he managed to kind of get in this vague language about unemployment. He didn't really give us any number.
I think so. Yeah, sometimes people forget just how good these guys are. You don't get to become the head of the Fed because you're average, right? These guys are amazing, not only at understanding it but also speaking it, right?
Absolutely, and on that front, we don't take what they're saying as read. We've got to continue, as Jules said, we've got to continue to watch the price action, but we've also got to continue to watch the numbers, because what are the numbers saying? And the numbers are suggesting that tapering and potentially the interest rate hike might just happen a little bit sooner than people think. But the most significant thing to watch, and we haven't really got time to go into it fully, but the most interesting thing for us to now watch is the bond yield, because that raises interest rates through the back door. So we're talking about interest rate going up, fine. We all consider that interest rate hikes are all to do with the Fed and them changing the interest rate. Not the case. The bond yield will tell us whether the interest rate goes up on a day by day, week by week, month by month basis. Now, so far, the bond yield hasn't really performed. But if that starts to get up to 170, watch out stock market.
Interesting. I've got to say, Ash, I reckon that would be the sentence I've heard more than anything else in trading in the last 5-10 years. Watch out stock market. Watch out stock market. And it's just gone while we were talking about it. Fascinating thing. I think, it's one of the things, Ash, that at the end of the day, what Julian says and what you says is completely right. At the end of the day, the stock market can't keep going up with no basis to it. Eventually, there has to be a correction. Doesn't mean we're going to up 30% a day. In fact, we can't anymore up more than 6% a day, maybe 7% on the US stock markets. I don't think there's going to be a massive crash personally in a day, but it can't just keep going up forever. It really can't. At the same time, I bought it last week. Why not? If it wants to keep going up now, I'll take the money, right?
Well, this is the thing, and I suppose this the reason that we can say with confidence that it can't continue to go higher is because at some point it doesn't return what investors are buying, and but the earnings season has been stellar. I mean, the problem is, and this is where you do trust the numbers, but then you go, oh, but hold on a minute, those numbers can be massaged. The numbers are being massaged, and again, it's a conversation that's way too long for here, but. The way that these earnings have been better than have come out way better than expected aren't necessarily because they're selling more products and they've got more customers. There are different ways that they can achieve those same numbers, share buybacks, lots of different ways. And this is where it becomes a bit dangerous. And you're absolutely right. Stock market's going up, just buy it, but be aware that a turn could come. And if it does, and it's at these elevated levels, the turn could be pretty hard and swift.
Well, it's one of the things, and I know we need to move on. We've got some great people coming to share not far away, but one of the things that I look at this stuff and I just go, I'm really thankful that I'm trading this stuff on a retail forex broking platform, even though it's an indice, because I can put a stop loss on there.
Yeah. And
look, I might get slipped a little bit, but I'll get slipped a little bit, but I'll get out. Those guys that are holding physical stocks are going to get stuck in this. And those of us that have got an ability to put a stop loss and go to sleep at night and know it's going to be okay, really helpful. It's just, if you're in Bitcoin at the moment, you've got to have a stop. And you've got to understand that everyone says it's going to go up to this day, then it's going to come down. One thing that won't happen is that.
Yeah.
You know,
Yeah,
that
yeah,
will
yeah.
not happen, right? Someone's going to front run that. Someone's going to hold on. It won't be that. And that just means you got to be, you want the ability to get out of your positions with some money banked in profit if you can. But I've got to let you go. Thank you very much for your sharing. I really do appreciate it. Always interesting to have a look at the numbers.